In this episode, we're going to talk about what it means to tokenize real estate and how that actually happens. So for a long time, I thought that people were going to create NFTs against the titles of real estate, and you would fractionalize the NFT and people would be able to trade those. That's not actually how it's happening, even though I do think that the titles, on properties and vehicles and a lot of the things that we own today will become an NFT that you hold in your digital wallet later on. Right now, with the legal compliance that exists, what actually happens is an entity, an SPV, which is what syndicately helps people spin up, will acquire something, and that entity owns the underlying collateral. Well, they're shares of the entity, and people can trade those shares. So Link2 is already doing this with late stage private equity. Before those companies IPO, they are buying large tranches of those companies, putting it on their platform, and they have a 506c SPV that owns the underlying collateral, those shares. So those shares aren't actually being traded. You're trading a derivative of those shares, which is the SPV, the ownership of those shares in the company that owns them. And so what's interesting about this is after a company declares that they're going to IPO, they'll file an S1 and it will lock all of the shares on the secondary market from trading. Well, Link2 will still be able to trade their shares because they're not trading the actual shares of the company. They're trading the shares in the SPV that owns the shares of the company. So you could see some really wacky things happen, especially if there was insatiable demand for those shares and not enough supply within that pool. You could see there's a possibility that the shares of the SPV could trade at a higher valuation than the underlying shares will actually IPO at. So we'll see if that happens with any of those companies there. But a lot of people are doing this with real estate and other assets as well. So you have a company that's spun up a special purpose vehicle, an SPV, it will acquire the property, and then people are able to tokenize the shares of the SPV and then trade those in a marketplace. It's not going to actually be done there's two layers, and that's what I didn't realize when I first had this notion of the ability to exchange things back and forth. I thought that it would be the actual ownership in the property, when in reality it will be ownership in the company that owns the property. So it will be a secondary derivative of the actual underlying collateral, but it facilitates people's ability to trade those shares and have the liquidity that they really want when they're making an investment in something. You'll be able to trade your ownership in the company easily through a marketplace and maybe be able to make a lot of money trading things that were previously very illiquid, or you had to have a lot of money in order to even get into. So it'll be exciting to see as this develops. The average person, I think, will be able to trade ownership in companies that own real estate. REITs do this now. You can get in on that, but they don't really allow you to trade the shares of the underlying collateral as it appreciates. So it'll be interesting again to see how this space matures, but I felt compelled to get on here and explain this. I was excited when I learned it and wanted to present it to you guys. So hopefully that was valuable, and we'll see you guys on the next one.